Debard is portfolio manager of the Hotchkiss and Wiley Balanced Fund. Now, this fund aims to secure capital while producing a high total return, combining income and capital growth. Roger, good to see you.
Thanks, Mark.
What do you make of the market here? Stalled out around 11,000 on the Dow. Doesn't seem to want to go up. Doesn't seem to want to go down.
Well, that's right. That's why we have about 46% in the equity market today, and we find tremendous value, though, in the unplayed stocks, the neglected stocks, particularly in 1998.
Oh, I think you're playing Greg's tune here. Before we get into that, though, 46% in stocks.
Yes, and 54%.
Historically, how is that? Is that high? Low?
Actually, it's close to the historical range. It's a conservative balanced fund set up to be about 50-50 if the markets are on parity with one another, and we think they're pretty close to parity on both the fixed income and equity side.
So you're finding stuff to buy in the mid-cap, small-cap arena? In
the large cap, mid-cap. We're not in the small cap.
In the large cap and the mid cap,
right?
Or in the larger mid cap?
In a combination of both. In other words, we are truly looking.
Give us some names.
We're looking for value. We're looking at a company, for example, a Tenneco. It's at the low end of the range for the last 12 months. They're going to split the company into two parts: packaging and automotive parts. The market didn't particularly like the idea of splitting, restructuring. They would have rather have had a sale of assets. But from a long-term standpoint, it's probably very good for the company. It yields close to 5%. It's going to grow at about 9% per year. Well-managed company.
Well-managed, no question about that.
Are you bottoms-up oriented, or do you look at certain sectors and you say, I want exposure to a particular sector?
We're bottom-up, and that will then drive how we allocate by sector. So, for example, today we've got about 20% in the utility industry, which combines the telephones and the electric utilities, some natural gas.
What do you do on the fixed income side?
Investment grade, intermediate maturity. And I think that's a particularly viable place to be in today's market.
I was going to ask, would you advise people who are interested in fixed income, that this is a good time to buy?
Well, I think so. Bond interest rates went from 5% at the beginning of the year, which probably was not a good time to be aggressive in the fixed income markets, obviously by what the market's done, but at 5 3/4 to 5.8% on the long bond, just using that as a benchmark, 5.5% for a 10-year. You don't have to take too much less for a 5-year. It's compelling. So yeah, I think that the fixed income, particularly if you go beyond treasuries, in selected corporates, asset backs, mortgage securities offer a tremendous value. We have about 30% in treasuries, for example, and 70% outside of that earning spread product returns.
How are you doing this year so far?
Excellent. The return is about 5.3% year to date. We've got a lot more of the year to go. And I think this fund is particularly suitable for a market that's going to be highly volatile, and I suspect that's what
that was going to be my next question. Now, if you were convinced that we were heading into, say, a 15% correction, what would you do, if anything?
Be adding to our equity portfolio.
You would?
Yeah. Okay. We'd be using that market volatility to be.
How much cash do you have on hand?
We have virtually no cash. We use the treasury as our liquid reserves there.
Okay, so if the stock market were to start to decline, you'd be buying into it?
We'd be buying into it at this juncture, yes.
All right. Thank you very much. Appreciate it, Roger.
Thanks, Mark.